All right. Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for July 13th, 2013. Get started with the market health check here. All right. So 4 days ago, we managed to get that COTA 2 off the bottom. And it went up and tested the Bollinger Band mean at about the 10-day high. Was not able to push through higher to the Z2 or the fair value or the peak of the dragon, but rather has given us a series of descending highs, lower lows. Today was a gap down and recovery, but it still closed lower day over day for another 0.5% loss. And we came, dangerously close to Z-1 and the PSAR flip. Short-term momentum remains downward. The daily range increased with that downward pressure. That's not a good sign. We're about 20.2% off the top. So that's not good. So tomorrow it's Fisher cut bait time. This is where the last time that it held support here, it gave that move. So it's got to make that move right about now, or we're going to be right back here testing the 30-day low, the 10-day low, the 150-day low, at around 363. So that's not a great distance to traverse at all. So this is not so good. On the other hand, if it does hold here above the 10-day low, this would almost qualify as not quite a COTA 2, because that's where the RL10 would have to be. But really, if this is able to get like 2 or 3 days in a row of upward pressure, the RL10, which is in the spring, would roll up. Then we'd have a COTA 2. But that's got to basically start tomorrow, or we are back into a failed breakout, and then the downward case is really strengthened. All right, let's look at the sectors. All right. Daily sector performance. So the S&P minus 0.53. Diamonds were worse, minus 0.72. Those were the two worst performing sectors. Then you had emerging markets 0.23, tech 0.21, the Russell 0.09. Then there's your break even line between gains and losses. And then only the treasuries among our top 6 indexes in the positive at 1.15% to close at 116.44. So if anything, this actually reinforces the afternoon strength, such as it was in the index, that the speculative ones recovered more, leaving the larger cap maybe and the more conservative indexes to trail. So if you're looking for hope, that's a piece of evidence. That actually happened. All right, let's take a look at what underperformed today in the sector. So again, we have the S&P here, minus 0.5. So materials and ARC innovation, minus 0.6 and 0.7. And you had finance and the two lumbers at 0.9 to 1%. Then commercial real estate minus 2% was the worst. Only two targets were worse. Coinbase minus 2%. Squarespace minus 1.35. That's actually not a bad performance on a day when the market was down. This looks like a lot more things recovering and the broad market lagging. And, it could have been worse. All right. What was better than the S&P, starting with the sector? So you have global future of finance, real estate, Aussie dollar, marijuana, VIX, tech, all lost less, between 0.5% and 1/4. Energy off 0.16, blockchain in Mexico basically flat, and that brings us back to the zero line. This big stack that was in the green, staples, clean energy, FANGs, food, Brazil, oil, blended commodities, consumer discretionary, oil exploration, and wheat and precious, all of that between basically 0 and 1%. ARC Genomics, 1.18. S&P Biotech, 1.67. Lithium, and then Bitcoin around 1.5. Best performer in the sectors, blended large cap crypto, 3%, that individual targets. Ethereum, 6.5. We finally saw some strength in the metals. We had some good trades intraday on those. On the rebound, US Steel, 3.25. Cliff Steel Company, Cliff Natural Resources, 3.11. Alcoa, 2.22. So all the metals moving in tandem to lead the way up. That's good. I'm looking for more strength out of them tomorrow. Rivian and Tesla, 2%, 1.7. Tesla closes above key price level of 700 at 711. His R10 number is $5. And then Devon Energy had a good day at 1.27. So a reasonable variety of things to look for more strength tomorrow and more follow through. It's got to happen tomorrow, or this is really just such a failed breakout. All right, to the reports. Sniper trade of the day today in Alcoa. Here's the opening. It mucked around for a while until it broke out above. I waited for the signal to break above the PSAR, so don't be in a hurry. Initially, some success. I let it come back and scratch. Probably could have gotten something out of it. I just didn't want to lose money on it. Gave it as much room as I could. Then it continued south and broke through the PSAR on the downside. Should have done that earlier. Sorry about that. So there was that first scratch trade. It continues down through the dragon, breaks the PSAR, so we get short there. Standard risk box moves in our favor. Maximum favorable excursion gives me a 1, 2, 3 exit right here. So you get about a half an R. The upward movement continues. I wait for it to cross the PSAR. We get the long here. standard risk box. I would execute at the belly of the dragon. So really only risking that much, not really risking that extra piece. So just really risking that. So again, just being very patient on the patterns here. So here's the here's that reversal. Crosses the PSAR. Again, standard risk box. This is where, I considered a second position, considered one there, but I had some other trades on. So I'm just one position and just letting it ride, get the peak, 1, 2, 3, exit. So if that's 1 unit of risk, probably 1, 2, 2.5. So that's about 2.5. This was about 0.3. So we're at about 2.8 right now. The metals were really strong, so I let this fail. There was a short in here, would not have paid that much, but it was a reasonable signal. But the metals were so strong today that I just was only interested in the long side. So now it comes back, finds support, crosses the declining PSAR, standard risk box, which is like 40 cents in Alcoa. Makes the play, comes through, hits the PSAR, capture this. I think I gave back too much. I should have gotten out maybe a couple bars earlier. And then it just started grinding and was not attractive. So this was about 0.5. So total deal of the day was about 3.3 in Alcoa on the sniper trade of the day. And we've seen this one. We remain in bearish normal, weak on the short term, painful on the long term, slightly positive still on the risk Z, very close to the edge on that though. It's still showing some upside potential. The min pain, Merck, McDonald's, Procter, Walmart, Verizon, the max pains, Alcoa, Chevron, ExxonMobil. You'll notice that today it was the max pain trades, like the energy was strong and the metals were strong. So the ones that have fallen the furthest at the turning point often recover the most because it was a fear overreaction. So there's, people are discovering value in it. So I'm looking for more movement to the upside for energy and metals tomorrow. I will not be surprised by that. Still a lot of dojis today in the Dow. Lots of 5DDs, not a surprise. And now look at this whole section in here that all test out favorably. You have a great pattern of 5DD, and you have a very favorable reward to risk ratio in Chevron, Disney, DuPont, Goldman Sachs. Also, Microsoft should be on your short list because of the 5DD. And Travelers, 2.7 to 1. Caterpillar, 5 to 1 on a 5DD. So those are very useful. Now, Alcoa is interesting because it was a big percent winner today, but it is still 3.3 to 1 to the upside based on how badly it got smoked. It's still down 10% on the 10-day. So that 1-day move in Alcoa is what leads me to speculate that tomorrow there may be some more momentum in it because it had fallen so far. In the ETFs, hardly any dojis, but still plenty of auto framers to choose from. And you had strength in metals and mining based on the the steel companies. Oil had its little recovery today. There was no follow through in finance. Yesterday was a good day for finance, but could not hold today. No surprise, lots of favorable reward to risks on the auto framer. I'd read it just from the top down. And I'm looking at you, Alcoa and Chevron and oil exploration, Microsoft, energy sector, liking all of that. Even ExxonMobil is favorable. Daily squeezes, only 3. Johnson & Johnson Healthcare and Caterpillar. Caterpillar is interesting for that reason. It was a big auto framer and also a squeeze play, so that's favorable. U.S. Steel remains the symbol that is the most number of ATRs below its long-term fair value. So for the new folks in here, when we're looking at the RL270 as the long-term fair value, long-term fair value, that's the price that the long-term buy and holders think is fair. We're using the RL270 as that measure. And then at the other end of the spectrum, when there's a harsh sell-off and the RL10 starts to reverse, we use the RL10 as the trader's price, what they are currently trading it for. So when we see that kind of recovery like we've had lately, you can then measure the distance between the fair value of the long-term buy and holders versus the price that's available on the RL10 for the traders. And the difference in opinion between those two demographics is what makes this a tradable moment. There's such a big difference of opinion that there's got to be some resolution in that disagreement. And in this case, the size of that disagreement we measure in terms of ATR and express that distance between the RL10 and the 270 as a multiple of ATR. So in this case, US Steel is 8.8 ATRs just to get back to fair value. So you can give it 1 or 2 ATRs of risk. And if it breaks out on a swing trade like that, you're looking at a 8-1. Chevron, Cisco, also in that category. On the other side of this, the symbols that are the most ATR above their RL270, it's the same concept, only now what you had was maybe this thing had declined, and then there were reasons why people bought it, and now the RL10 has really exploded, and the traders got on it, and to the point where the RL270 is no longer failing, but has started to roll up. So in this case, AT&T is 3.5 ATRs, 1, 2, 3.5, 3.5 ATRs above its fair value. That's the measure of how strong the short-term move has been. So now you wonder, while it's up here, what's it going to do? Is there another leg up, or is it going to pull back and retrace some of that strength? So we can measure that reward to risk ratio in terms of its own ATR. So that's very adaptive. And these are in the ETFs over here, the liquid ETFs. And then these are the, Dow symbols over here. So that's a rapid swing trade framing tool right there. Shifting now to the sniper targeting folder. Our favorite setup, the Godzilla. There's plenty to choose from. 2 of them are extremely volatile. So the enraged Godzilla and all of the other ones based on that 5-day are stealthy. So fast and COO are both already moving out large. In our tactical symbol, so this is all the S&P 500 sorted by the 5-day volatility. And in this one, we also sort by the 5-day volatility Z-score. And this is from our tactical symbol set. So you see Latin America, materials, Alcoa, love it. Alcoa and Cliff today were both Godzillas and are still Godzillas. So we're loving that. Both of the lumbers and Mexico. So lots of things to choose from with our favorite pattern in our preferred tactical symbol set. In the fireworks, just two. General Mills, and I think it's Kellogg. These are ones where they have made very strong volatile moves. In this case, the 5-day Z-scores are quiet, so the 5-day range has really compressed, and the 1-day range has compressed into a very tiny doji. And so now you say, well, is that going to start failing, or is it setting up for the second leg up? We don't know. That's what we mean by the fireworks. And or popcorn, if it's very quiet, ready to pop. Because these are so quiet, this is actually popcorn patterns. It's been in the microwave, it's cooking, it's ready to pop, just hasn't hit yet. The fence sitters are the ones that are in the middle of the, the resistance and the support. And these things are right around the 50-yard line on their index on the long term and the midterm. Again, sorted by the 5-day Z-score. So these are all quietly fence sitting, waiting to just break out for a strong move, and you pay a very minimal price. These are excellent candidates for options straddles because you don't know when that thing is going to start moving out. But when it does, it's non-controversial that it could move up and test resistance. And that's a long, large move, and the same thing to the downside. So we're just waiting on the fence to see which way it breaks, and that's why the straddle is so interesting. These are the most quiet members of the S&P 500 and the most volatile members on the basis of the Z-score of their 5-day volatility, as we've explained before, sorted by the 5-day Z-score. I leave those to you to hunt, but I just can't help noticing Procter & Gamble, Micron, Ford, Gilead Sciences, Lowe's, Advanced Micro. I love the quiet ones because you can get a really small minimum manageable risk box, and the breakout is always surprising. There's Nucor Steel. But I also like the very, very volatile ones also because they are already moving. So like Fast, the Godzilla, has a 5-day Z-score of 2.4 and a 1-day Z-score of 1.65. That is a Godzilla that is enraged and rolling, as is Twitter, 1.23 and 1.14. Any numbers bigger than 1 are significant there. FCX is close. Almost a Godzilla. Very close. There's the standard statistics for our tactical set. You've seen that before. These are the sniper stats for our tactical symbol set. Again, sorted by the 5-day Z-score downward. Notice that only one symbol in our set has a Z-score greater than 1. Only one of them has abnormally large volatility, and that's lithium batteries ETF, and then food, and then Microsoft. And Microsoft's been a great trader. And then this is where they are exaggeratedly quiet, below that when it's more than, or when I should say when it's less than -1 z-score. So those are all the ones that are absurdly quiet and ready for breakouts. They are ready for volatility spikes. The multi-time frame indexes, still you can see all of the weakness creeping in. Anything that's a bright red means there was a collapse of support today. So IBM and JP Morgan, big time collapse, Coke, Walgreens. Only US Steel bucking the trend to be in the green on the 2-day. So that's a measure of its strength. This is how bad the sell-off has been in the red, but it's standing out because of its strength over the last 2 days. That's why I think there's more room for the upside. And here it's metals and mining. So you're getting some sector support in there as well. And then the defensive play of treasuries. I think there may be more room in that one too. That's the first place I'd look intraday if the market starts off weak tomorrow. The only thing going for the market after this little disappointing pullback is that today was a white candle, so that it closed higher than it opened. It's still testing these two support levels. So again, this is like, it has to start going tomorrow for this still to have the K2 pattern effect. The slope crossing its own 10-period moving average at a distance of more than 1 standard deviation from the long-term average. That's actually a good sign for the upside move. But again, that thing's got to start just about tomorrow or Friday, or it's going to be a long day of flat rock. Yeah, so if we looked at just price and with respect to the dragon, that's this one here. The fact that it made a low and it is now still holding inside the river, temporarily favorable. So if this is able to break out and go, then we'll see that as a kata 2 of support. But if it fails through that and then breaks this, look out below. So this is a perfect critical state for trading down in here. It feels a lot like this. So you can see that kind of move, but it has to start happening pretty soon. We're running out of patience. All right, next up, we'll take a look at some sniper trading today. Here's, let's see, Cliff Natural Resources. A quick, so here's the open. It was a quick sell-off, breaks out above and through the PSAR. I stuck around too long and I let a winning trade go negative. That's like a D exit. Should have at least had no lose plus dinner for 2. So that's bad form. I really thought that was going to go and I wanted to give it room. So don't do that. Now the metals and mining were so strong. I was only taking the long side trades on these early. But this was a legit short side shot. You should not have lost money on that one. That's your maximum favorable excursion. So if you got that short and it's coming back, you got to exit before you start losing money on it. Not like me. Not like that's bad. So don't do that. This one is a reversal. This has a kata 2 flavor to it and waiting for the PSAR. And this standard risk box. Very nice trade. We're happy on that one. So that's 1 unit of reward. So 1, 2, probably 2.5 on that one. This is minus 0.5. So we're at plus 2 net right now. Kata 2. Because we still have this. We have a low, a higher low still. It breaks the PSAR, standard risk. Standard Kata 2 entry, pays 0.2. And I missed the Kata 2 on this one. But again, this is all happening. This little upward move was happening in the last half hour. So when this really went nowhere, I was just done. So we get out of this with about +2. Next up, Boeing. So yesterday was a smooth and an orderly move in Boeing. Was hoping for some of that today. Didn't really get it. Here was the gap down. Opened here. Ran all the way up, ran all the way down, stabilized. You get a 1, 2, 3. I take a new high of the day finally here. Standard risk box. This thing ran up as high as this through the PSAR and then started to fail. So I basically keep half of the gain, and which is about 1 hour. So that's like +1. Waited a long time for that one to unfold. This thing was so volatile early in the day that I just was just waiting for the official breaking of the PSAR now. So we got this one on the reversal. It cashed. This rolled over quickly, comes down, breaks through the rising PSAR. So we're short. Standard risk box. Quick scratch. Kata 2. So we have a low, a higher low, a higher low. It breaks the PSAR. Long. Standard risk. Let's go. It really has to get above this price, though, to be interesting, to have a chance to close the gap. So this is all tactical trading space in here until it breaks above that previous RL10. That's where it becomes interesting. Quick scratch. Violates to the downside. This is feeling like a down day in Boeing. About a quarter of an hour. Try to quick short again as it's failing. Quick scratch. Just trading for the broker today. The stop and reverse on the SSC gets paid about a half. And it was like, okay, I get it. There's not much in there today. It stayed pretty much tight in this range all day then, which that's going to be a nice tight. So if I'm interested in this tomorrow, I should be looking for breakouts in either direction from here. But it really just could never get out of this chop. That was basically maybe +1 for the day on that one. I think we should, yeah, we showed Alcoa. This was the sniper trade of the day. So that was that nice move in metals early. And again, I'm only playing the long side on that one. And we saw that one at the start of the report. Here's Devon Energy. So energy has been really weak. And what we got today was from the opening, gap down, a reversal to the upside, cleared all this stuff, moved a risk box off the low. So I just buy it, and there's my risk. Standard risk from the R10, standard risk. Rolls, RL10 rolls over. One, two, three exit. So that gives us about 1, 2, 2.5. Missed the short side move altogether. If you're playing the short side, if you're playing them both direct, I was ready for long moves in energy today. So I elected not to take, this would be where the short should be with that same standard risk here as here. So if you're going to trade that, you use the same standard risk, and then you should not lose money on that trade. You should be getting out somewhere in here. So you make that. That's about +1. But I missed it. It was conditioned for the long side. So I do get the Kata 2 because I'm looking at a low, a higher low, crosses the declining PSAR, standard risk. Let's go. Standard exit, crossing the dragon. Sells all the way back down. I missed the short again. Take the, this now feels like more like an SSC than anything. I guess you could call it a Kata 2 if you wanted to, if you really wanted to, because you have a low, higher low. This is still kind of a higher low. You get it crossing the PSAR, standard risk. Let's go. Kind of a quick scratch. Missed the Kata 2 continuation to the upside. I was not impressed with all of the failed breakouts, and I was just we made a couple, maybe 3 are on that one. Treasuries. You know, here's the opening. I noticed the big gap down and failing, but it doesn't really fail much. And the PSAR or the MACD starting to rise. So I'm stalking for this declining PSAR. Get an SSC standard risk box. It recovers all the way back right to where you would expect, which is the peak of the RL10. It has one leg up and then rolls back, and then that's enough. So the abnormal gains couldn't hold. So I did not want to give back any of these normal gains after giving it a chance to go, and then it failed. So that's why this is a good exit. Psychologically, you're giving it a chance. You're giving it a chance to impress you with up here in abnormal gains, but you don't let it You don't let it come back to here. Kata 2, you have a low, higher low, PSAR flip box, PSAR is crossed, standard risk. Let's go. Treasury's trading like a champ for about 3R. Missed the second Kata 2, but was pretty happy with that one. I mean, the treasuries just kind of quietly gave me the trades of the day. You know, here's one unit of risk, 1, 2, 3. Here's 1 unit of risk, 1, 2, 3. Almost 6R out of those 2 trades on standard risk of 50 cents, which is the R10 value for TLT. Alexandria Real Estate. This is that healthcare real estate company. Has a gap down, harsh sell off, missed the short, but it gives me an SSC. All I'm doing on this one, and it's Buddy Peak, is I'm just waiting for the first official signal in the sniper trading, you know, and I'm waiting to see after the big gap off at a reversal, I'm waiting to see it break the PSAR and do an SSC with a standard risk box. That's all I'm waiting to see. That's my trading plan. That's sticking to it. Take the standard exit at the PSAR. Miss the short. I take the Kata 2. A low, a higher low, crosses the PSAR. Entry, standard risk. Let's go. +1. Another SSC scratch. So that was enough. What I was no longer interested in that one because this low got lower than this one. So this broke the Kata 2 chain. So this is an SSC, and when it doesn't work, I just get out. All right, last one. Clorox. This is a staple. I missed that one so big. I got a TC 2000 alert, but it was a span of control. Too many other positions on early. So you just mark it up. Here's the PSAR flip. Standard risk box, additional breakout. That's where the entry should be. You roll that up, you should be getting out here and capture this against a risk of that, which is about almost 3R. If you play the standard PSAR exit, you get out there. I would prefer that you get out over in here and make bank earlier. Kata 2, first entry, and then because you have a low, a higher low, breaks the PSAR flip. There's your risk box. Let's go. Standard exit, standard re-entry on a Kata 2. This thing failed to fail and started to resume, crossed the dragon and kept going. Standard exit at the PSAR flip. I mean, What is not to love about the way this thing trades intraday? Holy smokes. They make bleach. So there's your risk. So that's 1, 2, 3. Here's your risk. 1, 2. All right, let's see how the gang traded today. Let's take a look at some traders. All right, here's Paul. There was not much movement in the euro dollar pair today. He did notice that this one was available. That's the trade he should have been in. This breakdown of the Z3 pinch box. There's your Z3 breakout that would have paid. Here's a SSC. Great exit. I like the COTA 2 reentry, quick exit. This was a little slow to get back in, but what I like is that he was able to capture the gift that was there. I like the short that got paid. I like the patience. I love the quick exit. I like the effort, the quick exit. I like the effort, the quick exit. We're now starting to maybe grind too much because we've got 1, 2, 3, 4, and we are getting into a sideways quiet channel. We should really be now waiting for the Z3 breakout. So that would have saved us about an R. And then here's the breakout out of the Z3 a couple times. And then the grind is starting again. But that would have been the difference between 0.1 and probably 1.1. But there just wasn't much in that one today. Tim, fresh from his 1-day sabbatical with the owl, and feeling much better. PSAR flip box, standard risk, great exit, PSAR flip box, crushes it, COTA 2 reentry, gets paid, PSAR flip box, crushes it. This was maybe a second position available. Again, he does such a nice job over here, and he has noticed the support that was here and here. So this move to here, again, the least surprising move, if the market again finds support, that may have been leading to another gain. So really nice work today, kind of back in the saddle. The 1-day decompression back to 3.8. Felt relaxed and in the flow again, so this is good work. Now you know how to do that. The owl meditation will clear you in about 10 to 15 minutes. I do it once a week. Paul experimenting with the minimalist sniper charts. He's liking it. 1, 2, 3, got paid. Waits for the standard box now. Got paid. I think this was slow to get in. I think you could have gotten back in here on that recovery. Then you probably would have scratched instead of losing 0.8, which would make this a 3R day. Caught a 2, very nice. Great exit. The short, we might have taken it here. I don't mind you waiting for that one and breaking below this. I kind of actually like that, and then got paid. Yeah, and he notices that this was a range stat move off the bottom. That's the maximum reasonable intraday move. That's a $50 move in Tesla. So he was being very careful on the Kata 2s. CPI report today. Pretty nice work. Stays out of the market during the chop. Got his feet wet. Got a little taste. The report now, recovery off the bottom, 1, 2, 3. Got paid. Waits for the chop to slow down. Then plays the breakdown short. Then the SSC, crushing it, and a great 1, 2, 3 exit. Really nice work for 8. Paper trading to keep his, to work on his span of control. Brings home a little bacon in Caterpillar, and grinding a little bit in Tesla. I like that trade, the 1, 2, 3. This one I think should have been here and at least break even. And then here's the one. And that's a cost of the span of control, to be honest. So that's still pretty good work right there. It's a 9-hour day. All right, that's everything we got for the gang. And we'll get this published and posted in the usual way. Thanks for your kind attention. If you're in the sound of my voice and you have not been looking at the Creativity 202 stuff, I really think you should be. The guys are really getting a benefit from it. Long term, I think there's something very healthy and developmental in that. It's going to help you not just in trading, but in a lot of improved decision making and problem solving. So more to follow on that. Take good care, and we shall see you tomorrow.